This week is one of the craziest weeks in markets that we've had in a long time. And in this video, I'm going to be going over the trades I am in, the trades I'm looking to get in, and my general outlook for this week's hefty market news. Let's jump in. All right, guys, so a quick look at the Forex Factory news outlook for the week. We do have several red folders. As you can see, it's just a wall of red here. Let's take a quick look at just some of the notable things. The big one that I can see is, of course, we have UK jobs numbers. We have CPI, which is a huge one, probably notably one of the biggest ones of the week. We have core CPI and CPI numbers, where headline CPI, which will give us a little insight as to whether or not inflation continues to cool. It is expected to come down here. Forecast is 4.1% from the previous 4.9%, and core is expected to remain unchanged at 0.4% year over year. I'm sorry, month over month. On top of that, we do also have a couple of notable things. The biggest day of the week is going to be Wednesday, where we have just a massive collection of data coming out. We have GDP from the UK in the morning. We have PPI numbers, huge important factor, as this is looking at producer price index. You also have the Fed rate decisions on Wednesday at 2 p.m. This is our biggest of the week, I would say. Of course, the whole market will pay attention to this, as well as the statement, which will give us some economic projections and guidance going forward from the Federal Reserve on where they think to go. Now, there's expecting right now to be a hold, meaning no rate hikes here for the first time in a long time. We've been staying rate hike, rate hike, rate hike. Now we're starting to see potential pause, and the market's catching wind of this. It'll be very interesting. We also have the press conference at 2:30, so stick around for that. And we will be live streaming for most of these events. Just check in on the channel before, and you should see us live. On Thursday, we have another big day, with the ECB coming out with their interest rate decision. Core retail sales in the US follow that shortly after, retail sales as well. Unemployment claims, I mean, it just does not stop. This is a chaotic week in terms of news, and we'll be here for all of it. The ECB press conference comes after that. We have the Bank of Japan setting their monetary policy. Oh my goodness, lions, tigers, and bears. Oh my! Are happening in the Forex market. Whether you're a futures trader, indices trader, whether you're trading Forex, it doesn't matter. This week is going to move the markets. Let's have a look at the charts. So here we are, guys, starting out with the big boy, the US dollar, of course, the most traded asset in the world. The dollar has been trading lower recently, but finding some support, it seems, going into this week around 103.3. Now, where are we at with this, and what's the bigger picture? 4-hour chart has been kind of an interesting one. We've seen this thing go from an upward trending market to a sideways, and now, in my opinion, looking kind of weak market. Now, it's too early to tell. We have big news coming out this week, and I'm not a fortune teller, and I do not claim to know what the news is going to do. Anybody who is telling you they know what the news is going to do, or they trade news spikes, is totally full of it. They do not know, and if they do know, they're doing something illegal, and you probably don't want to be involved with that anyways. Avoid those scams. There's a lot of them going around where people, claim they know what the news is going to do. They trade the news spike. And they take your money willfully to do that. We don't do that here. We don't know what the news is going to do. We're not fortune tellers. If someone knew, the whole market would have already reacted by now. Think about it. Be logical. Don't trade news spikes. It's not worth it. It's gambling.
I'm all out of money!
Because the spreads get so wide, so dangerous. Regardless, we trade what the trends are telling us in terms of fundamental and technical moves. Recently, though, in terms of the dollar, we have an optimistic start for the bears, meaning this market seems to be trending down. We see lower highs coming in, we see new lows. However, recently we've found sort of a stalling out point. Despite this, yes, there's been a little bit of a bottom, but remember, the context is still bearish. So as we look at this, you may get some retests of resistance this week, but I am generally going to be positioned bearish going into this week. Now, again, that doesn't mean I'm going to, leverage my account right before a news event and, bet that the dollar is going to go down. That would be, in my opinion, very foolish and akin to gambling. But I think generally speaking, I'm going to be using small position sizes as always and looking for a bearish continuation. So my bias this week on the dollar is bearish. I think that we do see, of course, the Fed is almost certainly going to pause this time around. The question will be forward guidance wise, whether or not that is going to persist or if they're going to plan a rate hike going forward. We'll see. The market will very much react to this and will trade reactionary. What I mean by that is if this market just blows through the highs, I'm not one to, I'm able to put my pride to the side and say, hey, you know what? This now looks bullish again. Let's get out of the way. However, I think that that is possible, but not what I'm thinking it will happen, right? And again, I can be wrong, but this is what we're looking at. Gold, I'm sorry, the dollar generally bearish. Let's talk about gold here. Gold, still very choppy, still range bound. And I've made the point that I think that 1970 is your breakout point that I will be looking out for on a bullish perspective. So if I think the dollar is generally bearish, fundamentally, I'm very much looking for a 1970 break and retest where I think you could go zone to zone up to 1980. Now we're grasping at straws here because the gold market has been really range bound. There's not a lot of excitement here on this chart right now until I think we get a breakout one way or the other. Now, let me be devil's advocate to my own analysis, and let's say that we are wrong about the dollar. The dollar is super strong. Watch for a breakout underneath. If you are a gold bear or a dollar bull, breakouts and retests here, despite my analysis, and I can, like I said, I'm aware, I'm agnostic to the fact that I can be wrong. That's okay to be wrong. And if you're a trader and you don't yet acknowledge that you can be wrong, the market will do that for you. Trust me, it is a humbling place. Regardless, I'm looking at gold and I'm saying if price breaks underneath here, that would just be all bullishness is paused. If we come down here and we bounce, I'm still bullish. If we break out, I'm bullish. If we break underneath the lows, however, that's where I've got to be bearish. That's where I've got to be, agnostic enough to just say, hey, you know what? This is not working out. Let's get out of the way. I don't have any gold trades open, but what I am looking for is either a retest of these lows, at which I think I can get a half decent entry on a range bound market. I'm not usually trading range bounds, but I don't mind it right now because I am bullish on gold. Fundamentally, I think that the Fed is likely looking to turn the ship and start to become more dovish. We'll see if I'm right about that. Again, very much dependent on CPI numbers and inflation. Breakouts here could be interesting. That is where I will be very interested as well to add to a long trade on the way up. So we'll see. Now, I also want to show you guys, of course, gold gets a nice bullish bias. There's some stuff here that I want to show you. Now, many of you guys love to keep up with the smart money tracker. This, of course, shows us what institutional traders have been up to from the COT reports. Now, pay attention here. There's a couple things I want to show you. Gold has been relatively uninteresting, but we did see shorts come off last week. So overall, I would say that this was a bullish COT update. We saw gold contracts go up to 237,000 and generally looks bullish. Now, on the flip side, the S&P has been very bearish, but look at the shift. Look at the backpedaling here that we see. S&P 500 officially had a huge increase in longs and a ginormous decrease in shorts. The short to long ratio gave back some of its grounds, going to 70-30, whereas it was higher than this last week in terms of favoritism towards the bearish side. It's very interesting to see the S&P, the institutional money seems to be building a position on the long side, which is what I did last week inside of our group. I went long S&P. Whoops, let me see if I can put that back where that's supposed to go. Sorry about that. I picked up long positions last week inside of the group after a break and retest occurred here. I picked it up long and I'm still in my trade. So this is a trade that I shared inside of the Discord and this is what it looks like. So you can see on the S&P trade, I picked it up long last week. This was the reasoning as to why I took the trade, officially in a bull market, cooling inflation numbers, which as I mentioned is to be confirmed. We'll see if this is happening with the CPI number on Tuesday. Solid technical breakout and retest, stop just below Friday's structure lows. 1 hour candle showing some strength, momentum play, and we'll stop out if necessary. So this is where I'm at. I'm floating a $280 profit, $290. It hasn't really moved too much, but again, I will watch out for this. We can zoom in on the P&L. So this is where I'm at. Timestamp it, take a look at it. We'll see how that progresses going forward. About $300, give or take, on this trade so far. And I do plan to hold this as long as necessary. What I will do for those of you guys who are members, keep an eye on it. If we break through the highs, I'll be looking to trail my stop loss from a losing position possibility to taking that risk off the table. Whether it moves it to break even, I'll have to look at what price action is doing at this time. If we put in a nice higher low here, that very well may become where I put my stop loss. If you are not already inside of the Discord, here is what it looks like. Again, I share all of my entries, my position trades, my swing trades, my options trades, and Frank shares his swing trades and his stock trades as well. If you're not inside the Discord, check it out. Got something cool for you. We are currently doing a 50% half off sale on all memberships. So This is my warning to you guys. This week is highly intense. We have a lot of stuff going on, and we are going to be very active in the community. If you guys are not already inside the group, this is the best week ever to join. Get half off. It's the biggest discount we've ever done percentage-wise on the memberships. You get access to all of our entries and exits. You get our trade breakdowns in full detail. You get coaching webinars, strategy libraries, and of course, you can join the chat rooms, communities, get involved with everybody in there. 50% off right now. There is a code down below. There's also a way for you to message us if you have your questions. So down below in the description, this is what it looks like. You'll be able to open up a Talk To, which is a direct message center. Click chat now and click 50% off the VIP signals, and you can join the community half priced. Any membership, monthly, yearly, or our lifetime membership. There you go. Thank you guys for watching today's video. We'll see you next time. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.